Hi, welcome to session 5. In this session, we are going to refine our buy and sell signals. Why? Because the market can give you vague signals or ambiguous signals as well as fake or false signals. And we are going to see how that happens. Now, to help us, we are going to add two more indicators. So far, we have dealt with moving averages, and the crossover of two moving averages will tell us whether it's a buy signal or a golden cross, or on the other hand, a sell signal or a death cross. But if you look closely, say here, you are wondering, it has said there is a buy signal here and there is a sell signal here. But then this is not so sure. It's not a very clear signal. So this is an ambiguous signal. Okay? It's not a false signal, but it's an ambiguous signal. It barely says buy and then immediately says sell. And then afterwards, the faster moving average goes right down before it comes here, which is a clear sell signal, as you can see. It goes right up. Okay, so we are now going to see what are the two other indicators we are going to take the assistance of. The first indicator is the momentum indicator. How do you install this? You go to indicators, type momentum, and you will get this momentum. I have installed it, so I am not clicking it. Okay, you will get this momentum choice. Once you enter that, you have to right click on the indicator. Then you will get this. In inputs, I have changed it from 14 to 28, and in style I have removed all these other, leaving only the plus DI, that is the positive directional indicator, and then the negative directional indicator, minus DI. Remaining I have removed from here so that it cuts out the noise and it gives me a clear, the plus and the minus. In this case, the orange is the minus DI, directional indicator. That means negative forces are pushing it down. That is orange. And the blue one is the plus DI. So when the minus DI is on top, you will see the market is falling. And you can see here, right from here to here, the market has been falling. And when the plus DI crosses over briefly, you will see there is a bounce back. And here is the final bounce back. And it also gives you a confirmation that this signal is absolutely reliable. Now let's look at what happened here. Now here we saw there was a plus and a minus within a span of few days. Now what happened here, if you look below, you will see the minus DI has continued to be way above the plus DI, which means this is a false, or shall I say vague signal, not a very clear signal. You can also make out from the fact that this 21 DMA barely goes above the 50 DMA and comes right back. That is confirmed by this. So we know that this is not a genuine crossover. This is just a time pass, if you ask me. And the negative DI continues to remain at high levels up to when it stops. Thereafter it crosses down, and this one tells you that there is a genuine momentum change. This is momentum, remember, it's not the price, it's the momentum. So let's look at one more indicator, that is the stochastics. I drew the stochastics over here, and if you again look at this vague place, the stochastics is telling you there is hardly any crossover. This clearly indicates that the crossover is not a pakka crossover, and so don't go jump into the market. Over here on the other hand, as you can see from here, as you will see in this chart, that the crossover is taking place here, confirming this crossover as well as confirming this one. So now we have three indicators in sync. So it is a clear call to buy or a golden cross. Alright, now what we would have done, we would have first bought over here because you found that there is a crossover here, kind of. Now there you can see that the negative DI is going down and the positive DI is going up. Alright, so that's a good one. And if you look at this chart, you can see that the positive DI is going, not DI, the stochastic line is going up above the 80. This is the 80 mark and this is the 20 mark. So it's gone above 80, showing confirming the buy signal. Then we would have again done the same thing over here. Here too you would have seen that the negative momentum is going down and the positive momentum is staying up and going above the negative momentum. So while you can see that the gaps here are not big, that's why the price chart has not shot up. Whereas from here, the price, look at the gaps. The gaps are big, really big, showing a major downtrend. And then over here, as you can see, so you would have sold, bought, sold, and again bought. Now this is the area that we are now clear we should not have bought or sold. That's why just using the 2 moving average indicator alone is a little more risky, because there could be false signals or vague signals. Whereas using the momentum chart, which is this one, and the stochastic chart, which is this one, even in the stochastic I changed the period to 28 from 14. This is the way we make sure our buy and sell signals are, shall I say, little more trustworthy than just using only the moving average. Now, one last point here is that when you are doing a buying or a selling, it is important, as I told you in a couple of sessions ago, looking at the volumes. If the volume is suddenly very low, as it is here, these signals are not so potent, they are not so powerful as when the volumes have shot up and are remaining high. This is the last thing to look at before we decide on a buy or a sell. So this comes to an end as far as the buy-sell signals are concerned. We will next have to look how do we pick stocks to buy or sell. That is the second part of the course. Okay, thank you.